Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Tuesday, May 31st, 2016 is the end of the month, and we got this last day of trading. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we come together in these live sessions to take a look at the market macro to micro, take a look at the structure of the market, then we drill down to our targets, our hypotheses, and our trade levels. This is a subscription room, so if you want to contact me at quantumleapfutures@gmail.com, or give me a Skype contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. All right, so just taking a look at Friday. I have scrubbed my holiday data, so I've got the numbers from the holiday session, but I've taken it off my screen. All that volume that we had yesterday on the holiday is put into the Globex session. Friday, we are looking for a rotational day with an upside bias. Definitely what we got, and we basically got just a slow grind up in the afternoon to go in and put in that that high. On the Globex session, we've obviously gone up and tested the 2102.75 area. Our holiday high is 2102.75. Our holiday low is 2096, with the RTH session being 2099.75. Really, today it's all going to be about the 2100, whether we can hold, get above and hold and make a run towards that 2105, or whether or not we fail again and they come back down into this balance that we created. But before we get into all that, let's just go take a look at the news. We do have economic news. This is a lot of news out this week. 9 o'clock in about 10 minutes, we've got S&P CS Composite. 9:45, we got Chicago PMI, but the big one will be at 10 o'clock, which is CV Consumer Confidence. That will be the big news on the day. And then this week, we've really got a fair amount of news this week. We've got Wednesday, we've got ISM manufacturing. That'll be another big news. Got total vehicle sales coming out. Then on Thursday, we've got ECB press conference and the unemployment claims. Then we've got Powell speaking. So, I mean, right through, and then even on Friday, if we look at Friday, we've got average hourly warning. We've got non-farm employment change, unemployment rate. So, and then we've got ISM non-manufacturing PMI on Friday afternoon. So just to realize that this week is going to be full of news, and more talk about the Brexit, and I'm sure we'll get some things thrown our way. But the big one today will be at the 10 o'clock time frame. Taking a look at the macro to micro, I start with the monthly, work my way down. We've had great trend, and then we took it back in at the end of the 2015 and beginning of 2016, but we are back above the 9 and the 12 and looking for a continuation pattern on the monthly. On the weekly, you can see we've got good slope separation. We do have a bit of a technical gap, and that gap doesn't even get closed until we get down in the 2060 area and back into that key balance in around the 2063.50, 2061, and then our composite VPOC at 2051. It never shifted back up on the way up. So going to the daily, you can see we've got slope and separation. There is a technical gap, a move down to close the gap is going to bring us down into the 83 area. 82 is still going to be the key line in the sand for me. Nothing for us to pull back into the 2083, even that gap fill and test to the mid of that gap at 2078.75. Going to the 4-hour, you can see that we are still in this trend, but we are challenging the trend. They challenged it. Now they're trying to take it back and get back above the 9. We've lost a little bit of slope, a little bit of separation, but the trend itself is still intact. On the 1 hour, you can see I've drawn, it's better on the 30-minute, but we're currently right now trading in a megaphone pattern, higher lows and higher highs, but expanding, broadening formation. We want to be careful if we break out of the top side and try to take trades from the top side. Let's go to the 30-minute. You can see the trend itself here is being challenged with the test of the 9 and below the 20 at the 20.99. Going to the 30-minute, you can see this pattern much better. We are testing the upper trend line again, but we failed, and coming down and testing the 9 and the 20. A move down below the lower line is what I'm going to be watching right now. So we're going to watch for a break below this 97, 96 area, which could mean a bigger move down and a measured move off of this. Going to the 15-minute, again, another look at this megaphone pattern. We'll close the technical gap on the 15-minute. We do have a bit of a naked cross. It's not a perfect one down here at the 2097, 98 area. And again, we're waiting to see if we break below the megaphone bottom. And then the 5-minute, you can see that we're below the 9 and the 20, and clearly rejecting that 2101 area yet again. But it's really going to be about the 2100. Above 2100, you really don't want to be long, and below it, you don't want to be, I mean, above it, you don't want to be short, and below it, you don't want to be long right now. You know, if I had the holiday session, we had another gap up on the holiday session, but it's not valid. This is a possible exhaustion gap here, but we've broken out of the 2-day balance and out of this former microcomposite balance on the last breakout that centers around that 2085. Currently, you know, we've got not much above us, and looking at the book map, they've been moving the stops up higher. So I really think they're going to try to make a run for it early in the session, but we just we don't know that for sure, and we don't trade what we think. We trade what we see. Looking at key levels, you can see that the 82 area, you know, I'm even going to go as much as looking for a break below the 2080.75, but I'm going to use 82 because if we get below 82, I think we test this gap area, and the mid on that gap is the 78.75 with the gap fill on range at 77.25 and the naked close all the way down here at that 20.75. You can see that what is that like that? That should be expanded out. Right there, that the value area high is shifted on this. Again, this should be over here. Value area high is shifted down here to 74.50. But we still have that 96.75, the smaller time frame value area, and the value area low is actually sitting on top of the value area high of the longer time frame. And then let's just not forget that we had the 86.50 below us as well, because that brings us back into the last quarter microcomposite, and you know, a move into this Gaussian distribution here that centers around that 63.50 that I was talking about a little bit earlier. The composite is still down at 2051. It shifted down from 2061.50 and did not shift up on the way back. So I'll be watching as they come down to this 2061.50 if this gets shifted back above and we get a bounce. This would be the area that I'm expecting a big bounce between the 61.50 and the 51 if we come down here quickly. If we grind down, it might be a little bit different, but the first bounce I'm expecting is going to come once we get inside of this value area. It's going to come from 61.50 or 51, one of those two areas. Below us, key level is going to be the 87 and 85.75. Those are the targets in this distribution, with that microcomposite LVN at 80.50, the range low from the last gap up and the start of that gap. But 82 will be my line in the sand. Below that, I'm expecting to move through the gap down into the 75.75 area and test the value area high of the longer time frame and the value area low of the shorter time frame. So taking a look at this overnight session, again, this Globex session includes the RTH. I have the numbers for the RTH session, but I've scrubbed them from my chart. So I want to see the auction, how it's played out in Globex. So our Globex high, which was put in yesterday during the holiday RTH, I'm sorry, it wasn't. It was put in earlier on Sunday night. That's up at 2102.75. Our overnight low, Globex low, was put in at 96. And our VPOC is at 97.75. Just want to verify that's correct. Although we could get a you can see we're putting in a bit of a double distribution zone here, and we could get a VPOC shift up to 2100. Our VPOC during the RTH session yesterday, the holiday session, was 2175. So depending how much we trade here for the next 30 minutes, we could get a VPOC shift. But as it stands right now, it's at 97.75, which is one tick below the range high on Friday. And then we've got this LVN from the overnight session at 99. I'm going to be using 99 as a trade level because we've just been chopping between the 99.50 and the 2175. So I really want to wait till we're below 99, and then I'm expecting a bigger move down for the main target being the close from Friday session, which was at 97.50, 97 and a quarter, 97.50. And this should be moved up slightly. And then once we're inside of the prior day, I'll be looking for a push down through the overnight low and a move to test the value area high here at 94.75. Below that, move down to the Bank of Japan at 94, but the big target below is going to be back into this balance here at 93 and a quarter. And then the value area low from Friday at 91 and a quarter, 89.75, with the key target being 85.75. There's the 84 and a quarter range high. This range low. This starts our gap zone and moves, and we have a fairly large gap all the way down to 77 and a quarter, with the downside target being in line with our daily ATR target down, which is at 79, and so I'm going to be targeting that rather than 78, 75. Below that, 75, 72, and our key line in the sand still remains the same. I'm going to move it back up to the 82. I had it at the 80.50, but I'm going to shift it to the composite LVN for a move into that 80.50, and that'll be an initial target just before we get to that mid-gap fill. So those are the levels below. Above, there's not a heck of a lot. There's the overnight high at 2102. I am going to target the 2175. That was the VPOC for the RTH session. And then the key level above is here at the all-time high at 2105 and a quarter. And then we've got some measured moves, and I want to measure this move because this is the most current move. If we break out of here, and extension, break will be somewhere right around here. So we'll go conservative. So the main target measured move is 2104.50. Just below the all-time high. And the extended target on this 100% is 2106.50. And that's just above this microcomposite 2106. Where was that from? Sorry, I'm just not thinking clearly today. I don't know where I was getting that from. I'm getting that from the flex levels probably. Let's check those. Oh, man. I don't even have my flex levels open. How stupid is that? I don't know. That's had to have moved up on its own, so that's not a valid target. So above that, we've got the rule of 10 at 2110, and then our measured moves above at 1475. Our daily ATR upside is target is here at 2119.50. Our weekly is all the way up at the 55 level. So that's our upside weekly target. All right, so what's my main hypothesis today? Well, I think they're going to make a run. Oh, man. What is going on with my... Oh, sorry, I really don't feel well this morning. So I'm a little discombobulated. Are we going to get a VPOC shift? Not yet. Let me just do a data download, and then I'll go through my hypotheses. What was the news at 9? So S&P CS Composite beat at 5.4. All right, so my main hypothesis is an open auction out of range, seeing some responsive selling down into the 98, 97, possibly 95 level, and then chop around there and then grind up towards the 2105 and a quarter. I am targeting 2105 and a quarter if we stay above 2100. So main hypothesis is open auction out of range, a move down somewhere between 98 and 95, we find responsive buyers, maybe even a dip down to the 93 level, but eventually working our way up towards the target up here at 2105. Sorry, just got a little bit, let this download work. I'm going to try to hang in there here as long as possible this morning, gang. Okay, and we didn't get the VPOC shift. My secondary hypothesis, oh man, did it bring the holiday session in? It did. Sorry, I got to scrub my holiday data. I don't know why I brought it back in. It should have just remained. It's going to be one of those days. All right. So my secondary hypothesis is we're going to get an open auction out of range. We chop around, and then we push up, take out the overnight high, take out the all-time high, and fail somewhere between 2105 and 2110, and rotate all the way back down through to the 93, possibly down into the 91. So hypo 1 is a move down into the 90s and then grind up. Hypo 2 is a move into the 2100s between 2105 and a quarter and 2110, and then responsive sellers stepping in and rotating us back down towards that gap. But I don't think we'll get there today. Hypo 3 is an open auction in range, a move down into the 93 area, chop around in the 93, and then get a continuation down into the 8750, possibly down to test the key line in the sand in the gap zone between 84 and a quarter and 82. And then my third hypothesis is we get an open drive, and they drive right through 2105, chop around in this area, and get a continuation wave, and we finish somewhere in around the 2114, maybe even touch up into the 2119 and get another continuation day. That's, based on the current auction, that's unlikely, but the fact that we're near almost all-time highs, and the fact that the OTF have been moving their stops up, it's a possibility we have to take into account as something that could happen. Taking a quick look at the Keltner, you can see that the Keltner center line is, and we did just get a VPOC shift. So let's move our overnight VPOC up to that 2100 and a quarter. So they are accepting value higher again, 2100 and a quarter. Okay, the Keltner center line, oh, I'm sorry, 2150. Man, get it right, Doug. Keltner center line is sitting at 99. That's a trade level. And then, again, you really don't want to be long from 99. You want to be long above 2100. I would even say maybe even wait until we're above 2101. But the upper Keltner line is going to take us to the 2104.75, which was one tick above our measured move off of that megaphone, and a move down below the 2099 takes us down into the 93 and into our VPOC from Friday. Take a quick look at gold. Gold is rolled over. I've rolled my gold over to the Q contract. When we move back down, we're below the composite VPOC, which shifted from the 1234 to the 1237.60. and we're currently finding balance here in around the 16 level. Key level to watch for today is 12, 18, 20. Above that, you want to be targeting the 21s. You can see that we've got a little bit of overlapping value area low and value area high here in around the 2040 and 2160. So that would be your first target. Anything above the value, target this 2660 and ultimately a return back up into the 34 and 37 area. Key line below us to watch is the 2109.90. A move below that, a move back into the 2106.40, which is replacing that 1206.40, which is replacing that prior composite VPOC on the adjusted contract that was at 1204.30. So that's the next target down here is the 1206 area. Anyway, sorry if I'm all over the place this morning. Again, not feeling that great. And as always, this is going to complete our pre-market session. Trade well, trade safe, and we'll catch you on the flip side.